Okay, it's now 5 o'clock, so we're going to get started. Hopefully everyone can hear me. If you can't hear me or there's any issues, just put them in the chat or raise your hand or let me know. But I think we're ready to roll here. So let me share my screen and you guys can see the presentation. Okay, I think you guys should be able to see the presentation. But if you can't see it, let me know. Or if you have questions at any time, just put it into the chat and I'll help answer it. Let me see if I can move this one now. Okay, here it is. So my name is Greg Tanaka. I'm with Lumiwealth. And what this webinar is about is a demo of our machine learning based stock forecasting with natural language processing. So what we're going to do is we're going to talk a little bit about what the course is about. I'm going to give you a demo of the actual code and how it works. And then, throughout this, I'll answer questions that anyone might have. So let me go to the next slide and give you a more detailed agenda. So I'll start off with some introductions. I'll go over machine learning based forecasting, what that is. I'll talk about some of the trading returns that we've seen by people using machine learning. I'll talk about the tools that we'll be using. I'll go in detail about the code, give a demo of it, a live demo, and then answer questions. Actually, for questions, I like to take questions as we go. So anytime you have any questions, just put them in the chat, and hopefully everyone can see that. Okay, so first, who am I? So my name is Greg Tanaka. I'm with Lumiwealth, and I have a pretty extensive background in machine learning, computer vision, forecasting. I'm a Caltech, Berkeley alumni. Been at 3 startups, including one that I started myself. I raised over $10 million from a company from Google Ventures, Adreessen Horowitz, Miller Ventures, a bunch of others. And I've done a ton of forecasting for my company, Pico Group, as well as forecasting work for retailers. So what is Lumiwealth? So let me share my screen, bring down the other screen here. Okay, so this is the Lumiwealth website. So what Lumiwealth is a company oriented to empowering you to kind of determine your own path by enabling you to have tools and knowledge to be able to do algorithmic trading yourself. The course that I teach is the machine learning for finance and trading course, but Lumiwealth actually has quite a few other courses. So let me show you the website here. If you don't know how to code, the company will help you teach you how to code, will teach you how to write a profitable financial algorithm. And my course is the more advanced course. Robert is the founder and CEO of the company. So I encourage you to go to his YouTube channel. And these are the 3 courses that are available. One is the algorithmic trading. So this is one where you learn the fundamentals of data science, how to backtest your strategy, how to build a algorithmic trading bot. So definitely encourage you to take a look at that. This is the course that I teach, which is the Lumiwealth machine learning for finance and trading. So I'm going to be giving you demos around this. And then the third part is development and consulting services. So if you need some customized consulting, the company can also provide that as well. So what we're trying to do here is really enable you to figure out how to use technology to do algorithmic trading. So this is some of the things that we'll do. So help you analyze and display data, perform financial calculations using code, back testing things, write better trading algorithms. So this is kind of like a nutshell. And I think that the thing that's really nice about Lumiwealth is that they have different plans. Let me see if I can find it. They have plans where, if you are on a budget and wanted to do kind of like self-paced, you could just look at the videos only. We also have live classes, which I just taught one yesterday for machine learning. And there's also kind of one-on-one learning. So we have different plans to kind of meet your needs here. So I can show you what that looks like. Oh yeah, actually it's actually on the course itself. The other thing that's really neat is Discord. So if you guys aren't familiar with Discord, it's kind of like Slack, but it's very, very popular, especially among the gaming industry. But Lumiwealth has a very active channel, has hundreds of people in that community talking about algorithmic trading. It's probably one of the most active groups out there. So definitely encourage you guys to join it. It's free. You can meet other like-minded people who are doing algorithmic trading. I'm on there right now as well, so you guys can chat with me. And so we have instructors like myself and others who really, our goal is to make sure that you are successful in being able to do algorithmic trading. And yeah, so encourage you guys to check out the Discord. And one thing that's unique about the courses here is these are real world projects. These aren't just some kind of academic stuff where it's it's more about theory and less about being practical. Our courses are really focused on trying to enable you to walk out with something that you actually use. So and I'll show you an example of what I mean with the course that I'm teaching, the machine learning course. Okay, and you can see all the testimonials. So it's a really great group of people. And let me jump to the machine learning course here. So so I talked about the kind of like the self-directed plan, which is the lowest cost one. So you get a sample code, instructional videos. So it's really nice because you can do it at your own pace at any time. The live classes is really nice because you'll get hands-on help. You can interact with instructors and myself to figure out like issues that you might be running into. I just got a question here to Delhi. Delhi asked, will there be a video replay? Will you be selling software? So Lumiwealth doesn't actually sell software. They have some open source like Lumibot type of stuff, but that's not charged. The live classes are recorded, so you can watch them later. And the good question about what is algorithmic trading versus predictive analytics. So algorithmic trading is basically when should you trade a certain security, and then predictive analytics is really forecasting what is going to happen. So what we're going to talk about today is much more about the predictive analytics versus algorithmic trading, although I'll show you a little example of algorithmic trading. And then another question here is machine learning and algorithms the same? How are they different? Okay, so I'm going to answer that question a little bit later, and I'll show you a little picture about what that means. But good question. So keep the questions coming along. Let me kind of continue walking through this. And let's see. Yep. The only thing is that when a chat happens, it doesn't really ping me, so I don't really hear it. So let me try to make this bigger so I can see it when it happens. Okay. Okay. And then there's kind of like the consulting side where if you need some specific help, we could help you with that as well. So here are the machine learning course plans. So there's a self-directed, which is access to a video library. You get access to all the code. You get access to all future videos and code. And then more importantly, the Lumiwealth community. So I think this is one of the best parts of the class is that people kind of get to know each other. Yesterday at the class, they talked about doing a study group together. So it's really a great group of people. And then the live machine learning class is and you could pay it off in monthly installments, is 8 weeks, 1 hour per week, although sometimes we go a little bit over. We have 6 hours of dedicated Q&A. So there's we're on Discord every day, so people ask questions there. And then does help with 2 personal projects. So the 2 personal projects that are happening for the machine learning course, one is just building a basic forecaster with some technical indicators, and the other project is using natural language processing. So in the course we actually used Reddit and we used CNN. So, but you could use other ones as well in terms of data sources. You really get to know your classmates, which I think is really important. And if you're looking to get a career in this area, we can help you with that as well. So check that out. And then there's also bundles available. So this is really good for people that maybe don't know Python, this course right here, because you'll get kind of the kind of like the more intro course, as well as the more advanced machine learning course. And then this bundle, which I think is probably the best deal, is basically live classes for both. So Robert teaches the algorithmic training course, and then I teach this one. And then this is one where it's both live courses. So it's a machine learning live class and an algorithmic live class. So this is kind of like, if you're not that comfortable with Python, but you still want to get into machine learning, this is probably the course I would recommend for you. So yeah, so the machine learning class is coming up next month, the next one. So it's 8 weeks for 1 hour per week. And then the algorithmic trading course is also coming up. So it's kind of nice to do it concurrently. So we have very high ratings. Lots of students have taken these courses. You get lifetime updates and a certificate of completion in case you want to get a career in this. So let me go over the agenda. The course curriculum. So we break it into 3 parts. One is the first part, we just start off with student introductions, helpful resources, how to get rolling, what's tool setups. The second one is basically machine learning basics. So what is machine learning? We start with some really basic models like linear regression and random forest. How do you do machine learning training? We also do explain what is shallow learning versus deep learning. Deep learning gets a lot of buzz, but sometimes shallow learning is more appropriate. When to use deep learning, and how do you train and validate? Because it's different than in shallow learning. The other part is how do you optimize the models? And with the advent of things like AutoML, it's much, much easier now. So we talk about that. We talk about the overall setup. The second part of it is the project. So the project is all around how to build a time series forecasting model versus a non-time series one. The theory, how to do the training validation, and then we actually build a stock forecasting model where you're picking different features, like measuring the error, and basically making it so that you can actually use it live. And then the last part is part 3, which is capstone project. So what's really important is getting all of the unique data sources in. We talk about how to use it. We do sentiment analysis. We also do classification as well. So it's kind of like what you need in order to be able to plug in signals into the model. So we'll definitely encourage you. The registration closes in, I think, in just a few weeks. So definitely it sells out. So you got to catch it quick. Otherwise, it will sell out. And I think I saw a question here. So Laura asked, I already enrolled in OneonOne project help tuning plan, both on algorithmic and machine learning, but I am planning to do the machine learning once I am done with algorithmic. Do I just make a point to ask questions, or do we have a structure one-on-one? So we actually, Robert's the one who actually schedules this. So I think he'll actually contact you through Discord or email, but that's basically how it works. And then Ademia asked, what is the difference between one-on-one and machine learning? So what I mean by the one-on-one is, so if you have a specific project that you're working on, you need help, basically like consulting help to try to get to the next step, we could help, either myself or Robert could help you with that. The machine learning is just about it's not learning about machines, it's about machine learning is a terminology of having the computers automatically learn patterns, right? And that's what I'll talk more about today. But good questions. So guys, keep on, is there any pre-made codes to buy? So not to Lumiwealth, I could talk about a little bit through my other company, Pico Group. So I'll talk a little bit about that, Dell. So good question. Okay, so let me go back to the presentation here. So our last class did sell out. So probably don't wait till last minute. Otherwise you have to get bumped to the class after. Robert likes to keep it pretty small. So there's only a limited number of seats for each live class, just so that we have enough time to help each of the students with their project. If you haven't checked it out already, there's a very extensive Lumiwealth website, a YouTube channel, where there's a ton of great videos to look at. So I would encourage you to do that. And this is our Discord channel. So you could go on there and and check it out. We also have a webinar, a survey at the end of the webinar. So please look out for that as well, and please provide some feedback. And yeah, Dell asked, what are the general terms of machine learning algorithm training? So I'm going to get to that in the presentation as well. And yeah, there will be a certificate when you successfully complete the course as well. And so Robert and team will get that out to you. And then, oh yeah, I see. Ademi is asking this: what is the difference between algorithmic trading, discover and test investment strategy, and when you're talking about? So algorithmic trading is where you explicitly tell the computer what you're going to do, and machine learning is where the machine actually learns what to do. So I'll talk a little bit more about that during the presentation. And Roderick asked, can you make a bot to trade crypto? And that answer is yes. Although of course we're just using Alpaca, which doesn't support crypto right now, but you can use the same principles for trading crypto as well. Good question, guys. Okay, good. So let me.
And Greg, just to add one more thing. During the algorithmic trading course, we can actually help you make a bot to trade crypto. So we can definitely work on that. If you buy the live classes and you choose to do your bot with a crypto strategy, we can certainly help you with that.
Thank you, Alicia.
Mm-hmm.
Oh yeah, so Alicia is also with Lumiwealth. So she's kind of the brains behind the operation. So she handles a lot of the sales and customer support. So thank you, Alicia.
Yep, no problem.
Okay, so let's go on to what is forecasting. So someone asked a question earlier about what is predictive analytics. Predictive analytics is essentially forecasting. And forecasting, if you think about whether you're trading crypto, stocks, wherever it might be, it's all about forecasting. You're trying to predict what's going to happen. So when you buy or sell security, whether it's crypto or Tesla or whatever it might be, GameStop, you're basically forecasting what's going to happen, right? Whether it's going to go up, going to go down, if you're going to short it, right? And over the past, I don't know, 50 years, there's been a lot of technical analysis type stuff like RSI, relative strength index, Bollinger Bands. There's a bunch of them, technical analysis tools that people have used to help them predict what's going to happen. They're really kind of basic, like calculations. And so like in this case, you could see that. So this is the stock for TSG, the STARS group. And then here you could see the RSI. And if you squint, you can kind of see that, well, hey, if the RSI is at this, it looks like it's going to be beginning of a run. And if it comes down here, that maybe it's going to flatten out. And there's once upon a time when using these technical analysis type of tools really made a big difference. But the really big problem these days is that this is kind of like this hand has been played too many times already. And so pretty much everyone's doing this already. So it's really hard to get an edge just with pure technical analysis these days. It's just hard to differentiate because like pretty much everyone does it. And in fact, there's a lot of algorithms out there that do this automatically. So it's hard to get an edge. So I'm not sure if you guys ever read a blog or a website called Seeking Alpha. If you haven't, definitely go there. It has a lot of great discussions. But one of the things it talks about is how algo trading dominates 80% of the stock market, 80%, right? So most of the trading on the stock market isn't human trading. It's actually algorithmic trading. And the algorithmic trading is a lot of it's based off like these technical analysis or machine learning. And so, profitable trading strategies based on simple indicators really is a thing of the past. It's really hard to make money on this. So a lot of day traders who just try to just do simple technical analysis, like stuff that people have been doing for the past 50 years is really not going to work. Maybe 50 years ago it worked really well, right? Or 40 years ago, or 30 years ago. But now the fact that everyone has a computer and there's all these algo trading bots out there on the market, it's super hard to get an edge. It's really hard to actually make money just purely on technical analysis, on just simple, and especially if you're trying to do it manually, because these trading bots are way faster than any human, so you just can't beat them. So this is one of the reasons why day trading by humans without the benefit of algorithmic trading has been kind of tough to make good money in. Not that you can't, but it's just harder. The other really big problem is what these technical indicators like RSI or Bollinger Bands, or like these rolling averages are trying to do is they're trying to make a prediction. But the problem is these simple indicators don't really have the capacity to capture complex forecasting patterns. So something, if you look at the formula for like Bollinger Bands, or formula for RSI, they're really kind of basic. They have only a few parameters. They can't really handle that much complexity. They can't really detect complex forecasting patterns. And so by using these technical indicators, it's really hard for individuals to get an edge, right? And you need that edge to make money, because really the stock market is largely a zero-sum game, right? You make money at the benefit of someone else, or someone makes money at the benefit of you. And so it's hard to get a, it's hard to make money just purely on simple technical analysis these days. Okay, so what are traditional indicators versus machine learning? So traditional indicators are the things I kind of mentioned, right? It's like simple rolling averages, right? It's things like Bollinger Bands or RSI, and there's a bunch of, there's probably over 100 traditional indicators. And a lot of these indicators were created at a time when most people didn't have computers. And so they're really easy to calculate. You could use like, a piece of paper and calculate these things out. They're very easy to understand, very straightforward. But the big problem with these traditional indicators is that they can't really factor in different information, right? They're just really simple ratios or simple summations or simple multiplications. And they can't really factor in different information. And the biggest problem is that they're too popular. So it's simply because the stock market or trading in general is a zero-sum game. If everyone's using this, it's really, really hard to make money. And if you go to like E-Trade or Schwab or Interactive Brokers or whatever, right? You see all these indicators kind of built into the tool, so you know that people already have access to it. So it's super hard to have something that someone else doesn't have. So it's hard to get an edge with this traditional indicators. Now, what machine learning is basically it's much more computationally complex, and sometimes you'll see you need like a GPU to calculate some of this stuff. So it's much more computation complex, and it's harder to implement. And that's the purpose behind the course. But the really great thing, and this is probably why there weren't a lot of machine learning based stuff early on, like 20 years ago, is because computation was really hard to do. But these days, computation is actually pretty easy. Because you look at like the new MacBooks and the M1 chip, it's just incredibly powerful, right? And then the other thing is that the really big benefit of machine learning is that you have almost unlimited ability to factor in different information to get an edge, right? To actually get to incorporate signals. Because the way you have to think about forecasting is you're a little bit like mining for predictive signal, right? So you think about, okay, the historical price of a stock has some predictive signal, right, of what it will be in the future, right? So like if the stock's trading at $100, it's probably not going to be $0 tomorrow. It's possible, but not likely. So there's some predictive signal in the historical price. There's also predictive signal in maybe, like if it's a real estate stock, maybe there's signal in the interest rates, right? Or if it's an automotive stock, maybe it's going to be dependent upon the price of gas or oil, right? As an example. And then let me see. I think someone just asked a question here. What are the prerequisites for taking this course? How much experience do I need using algos in order to really benefit from this training? So I think this is why we have the bundles. I think the nice thing about the bundles is that if you're not like an expert in Python or algorithmic trading, you could do that one and learn the ins and out of doing algorithmic trading, and then use this course to have more advanced predictive signals and get more accurate forecasting to basically get an edge. And that's kind of like the main point about machine learning is it gives you an edge, right? relatively few people, even institutionals, relatively few people use machine learning in their algorithmic trading because it is hard, it's computation complex. And frankly, just a lot of people just don't understand it very well. So, so the benefit of using machine learning is you get that edge. You could basically, as I said, you could think of forecasting in terms of you have these different signals, right? Historical price of the stock, maybe the price of oil, the price of the interest rates, and you're mining predictive signal out of this. And with traditional indicators, you can only get a little bit of predictive signal. With machine learning, you can get much more predictive signal out of these features, right? These input data into your model. So this is the big driver why people are using machine learning. One interesting thing is traditional Wall Street, that there are some quantitative trading hedge funds that have really adopted machine learning wholeheartedly, but a lot of big traditional banks haven't, interestingly enough. And one of the big reasons why is because machine learning is a little bit black box. It's a little bit hard to explain why it works or how it works. So that has kind of stopped some of the more traditional players in the stock market from using it, but it gives opportunity for individuals. Dell asked, what platforms do you use for trading machine learning? So my other company, Pico Group, actually provides a platform, but that's built on top of Google Cloud. But you could use other ones as well. But Google Cloud is nice because they have very, very strong machine learning capabilities. Okay, so what is machine learning? So I've been mentioning machine learning, right, a lot. So what is it? Okay, so the way to think about, and so this, I think someone asked earlier, what is the difference between algorithmic trading and machine learning trading? Algorithmic trading is basically you get, let's say, the historical price of the stock, and you're writing a program saying like, well, if the rolling average has been, either higher or lower, then you either buy or sell accordingly. And so it triggers that either buy or sell depending on what the program says. So you're explicitly telling the computer what to do. So that's what the program is doing, is explicitly telling the results. So if you can think of it like a typical programming construct is like if. So if the rolling average is, let's say, lower than the current price, then maybe the price is going to go up. So then maybe buy, as an example. Else, if the current price is lower than the rolling average, then maybe sell. Maybe the price is starting to go down. You should sell, right? So that's an example of like a algorithmic trading, conventional programming, explicitly telling the computer what to do. With machine learning, it looks like a similar box, right? Two inputs and an output. But what's really interesting is instead of telling the computer what to do, what you do is you do it by example. So you give it the data, like the historical data, and then you tell it what the result is, right? So you tell you basically take what you would have outputted, and you put this as training data, right? That's what we call like ground truth. And then from there, machine learning learns what the program should be. So it's kind of interesting. So instead of having to write the program, it actually figures out what the program is automatically. So it's kind of magical. But if you think about it, this is actually how humans learn, right? We very few humans, learn by someone cutting open their head and then someone programming their brain, right? Maybe a neurosurgeon does that. But most people learn by listening to someone else, a teacher, right? They get some examples, and then they figure out the program themselves, right, inside their head. And so this is actually closer to the way humans think about it than the way computers do it. Because with computers, what we're doing is we're explicitly telling the computer what to do at every point in time. And the big challenge with conventional program is that sometimes it's hard to write that program, right? Like it's hard to write a program that will predict what the stock is going to be. It's really hard to do that. But with machine learning, it could learn what the patterns are. And by learning what the patterns are, it can create the program that does that would detect those patterns. So right now, most of the world is conventional programming. You tell the computer explicitly what to do. But machine learning is starting to pop up everywhere. So you guys probably see it like in your Netflix. When you watch Netflix, it uses machine learning to predict what you would want to watch next, right? It uses what you watched, right? And uses that as training data to know to predict what you will like in the future, right? Or Amazon. Amazon has a recommendation engine where you buy something on Amazon and then they say, oh, you because you bought this, you might like this other thing. So it's a way to it's really hard to do that explicitly, right? Versus with machine learning, and this is why machine learning has become so powerful. Before, like people were trying to do things like recognize a picture of a cat, really hard to do with explicit programming, like conventional programming, but relatively easy to do now with machine learning. So that's the difference between algorithmic trading and machine learning. Ernesto asked a question here. This can be used with options and Forex. Yes, it can be. So so it's basically same basic idea. Alpaca doesn't really support options and Forex, foreign exchange, but you can do that in interactive brokers. Although in a course we tend to use Alpaca just because it's free and I mean free trading, which is nice. They don't charge commission. You still have to pay the bid-ask spread though. Dell asked a question: what is the difference between machine learning and artificial intelligence? So you think of artificial intelligence as like the superset. Artificial intelligence is like is like the big umbrella. The machine learning is like a subset of artificial intelligence. So so with machine learning, the kind of machine learning that we're doing here is something called supervised learning. Okay, where we're providing labels or what we call ground truth for the model to learn, versus there's also something called reinforcement learning, where it kind of generates its own ground truth or training data, or unsupervised learning. So there's many other different forms of machine learning as well. The one we do in our course is really focused on many different forms of artificial intelligence, but the one we're focused on here is machine learning using supervised learning. But very good question. So artificial intelligence is a superset. It's like there's also something called general AI, which is like trying to get okay, so those asking, I'm confused. Is machine learning software or code? Okay, so actually it's a little bit neither, right? It's not code per se. It's not like Python, right? Where you're saying if this, then that. What machine learning is it's a model. And the model have things called weights or parameters on there. And so what machine learning produces is a set of weights or parameters for a model. That's what machine learning produces. What conventional programming is you have these lines of code, like if this then that type of thing, right? So it's like pseudo English language. Machine learning is a set of weights, so it's not code. It's like a set of numbers, right? Unique numbers or weights for, let's say, your neural network or for your linear regression, right? That's what it is. It's basically a model. Output of machine learning is a model, essentially, but it's not a program per se, not the way you would typically think about it. Yeah, some models of machine learning. So there's a bunch of them, and I'll go through some of that later today, later in the webinar. So I'll answer that shortly. Okay, so let's talk about you guys. Some of you guys have been asking questions about what cloud do you use? How is this hosted? So let me talk about my my company called Pico Group. So what Pico Group does is basically we focus on day traders, professional day traders who want to convert their successful strategies into an algorithm, so you can do it automatically. And so this is just a straight a hire for consulting type of approach. And the reason why a lot of people are moving towards algorithmic trading in general is because the times of where you can make a really large profit on each trade with manual trading using day trading has that sun has kind of set, so to speak. And so you can still make money, but you can't make a lot of money. You can make a little money with each trade. And so it's kind of like the analogy of, you see a penny on the ground, there's still pennies on the ground, But if you have to bend down and pick up each penny manually, it's probably not that exciting or that interesting. But if you could pick up all those pennies with an algorithm automatically, then it can be very, very interesting because you're not going to have to spend your manual time doing that manual trading, right? So that's one of the big reasons why a lot of day traders have been moving towards algorithmic trading, is because there's profits to be made. They're just not as large. So you got to do a lot of them. You got to do like 1,000 trades, right? So the other service that our company provides is we host. So once we write the code for you, we host it on the cloud. So we use Google Cloud. There's a small service fee that we have for hosting it for you. We also provide an interface fee, which I'll show you a demo of later. And then we provide safeguards. So one thing that's really important, especially with algorithmic trading, is to have these kind of circuit breakers. So if the algorithm goes crazy, you don't want to lose your whole portfolio. So we have these circuit breakers where it will basically pull the brakes in case something goes wrong. The other thing that's really important is backtesting, and I can't emphasize this enough. So you may come up with the world's greatest algorithm or machine learning model, but it may or may not work, right? And to make sure to really see whether it works or not, you need to backtest it. You need to simulate it over prior data to see if it still works. And then our company also provides a bunch of models with our service. So that's a little bit about our company, Pico Group. And so I'm just need to read the safe harbor. So because we are not registered investment advisors, neither is Lumiwealth. So basically, okay. So first of all, let me talk a little bit about this now. I'll read you guys the safe harbor. So investors that have used machine learning based strategies have done quite well. So if you guys don't know, Sharpe ratio is a measure of the returns versus the risk. And usually a Sharpe ratio of 1, anything over 1 is usually really good. So a Sharpe ratio of 3.3 is like phenomenal. So a lot of machine learning based investors are able to get a pretty good edge. And average compound annual growth rate, it's really high, 42%, which, if you look at even some of the best hedge funds out there, is pretty damn good. So, your results will vary. And that's what this is saying here, is that, Lumiwealth and Pico, we are not investment advisors. We're not registered investment advisors. So we're not giving you investment advice. All we're doing is giving you guys the tools needed to build these algorithmic trading bots and machine learning models. So just want to let you guys know that. So this is purely for your information, giving you guys tools. Okay. So tools that we'll be using. Actually, I think I was going to give a quick demo here. So let me give you guys a quick demo. I'm gonna kick some stuff off here. So let me show you guys my website here. Okay, so this is Pico Group. So this is an example of what the interface would look like, and so we're going to submit a job here, and we have support for both Alpaca and Interactive Brokers. So we're going to do it for Alpaca. This number of times it retries it for the data pool. Alpaca has some restrictions on how many times you can, or how much data you can get all at once. So you have to sometimes try multiple times. We're going to do a back test here. And then we're not going to include the bid-ask spread. This is the number of times you want models to be trained. More times the better, but it's more computationally expensive. And then let's see, we're going to do, let me see, let's just do March 10th to the 15th. It's March 10th at 9:30 a.m. to March 15th at 4 p.m. Starting cash of $10,000. So this is a back test. We're going to have some play money to have here. And then type of strategy. So this is what kind of trigger. So we have like reinforcement learning type things. We have pair trading, this reinforcement learning triggers, but we're just going to use a simple one here. I'll talk more about it. I just want to kick this kicked off just because it takes a while to run. And then And then, when do you want to trade? Like how different should the prediction be from the current price before you start trading? And then we're going to trade the first one. I think A is Agilent. We'll do 10 shares. We're not going to set a maximum position, and then we'll sell the stock after sell the stock after it's finished. Okay, and then the one I'm going to be showing you guys today is random forest rolling. So I'm going to kick this on. I'm going to go into more depth of what this is. But I just want to kick this off because it takes a while to run. And then the forecast distance is like how many minutes in the future is 15 minutes, and the interval size is every 15 minutes. So we're going to kick this off and get it running. So it's just kicked off now. So just want to show you guys that. And then let me keep going on the presentation. Okay, so the tools we're going to use is Alpaca. If you guys don't know Alpaca, it's like the Robinhood of algorithmic trading. The trades are completely free. They don't have monthly fees, which is really nice. The APIs are very clean. The only big downside is that they don't have like cryptocurrency yet or options, but they're planning to. So it's not there yet. We use Python 3. Python is the most common language used for machine learning. Pandas is like the Excel for Python. So you can manipulate large tables. And then we're going to use a Python library called TA. So this is a technical analysis library. We're going to use scikit-learn. So scikit-learn is a very basic, commonly used machine learning library. Google Colab is really nice because this is like free machine time. You basically can run your algorithms on Colab or do development on Colab, which is completely free. So it's really nice. And then we're going to run it on Google Cloud Platform. As I mentioned earlier, Google Cloud has really, really nice AI services, which is why we use it. Like, for instance, we're going to be using the Google Natural Language Processor. So we're going to be taking sentiment data and feeding that into our model. Okay, so let me get into the code, but let me first give you an overview. So we're going to talk about the setup of how to use Alpaca, and then we're going to go into FinWiz. So let me show you what FinViz is. So FinViz, if you guys haven't gone to, it's a really nice website. You can have like, let's look up Agilent, for instance. You can pull up a bunch of really great stuff on the company. And it also has a bunch of new stuff. So this is what we're going to scrape. So I'll show you guys how to do that. And then, so we're going to scrape that with Beautiful Soup. Beautiful Soup is a Python library to scrape data. I'll show you how we set up the training data and how we test what the test data is. We train the model, and then we generate the prediction to look at the analysis of the results. And hopefully by that time, the job I kicked off is finished. Oh, okay. The question here is why use Beautiful Soup instead of Selenium? So, so if you guys don't know, Selenium is kind of like a way to do kind of like robotic control of like to basically click on web pages, like click on next, and then Beautiful Soup is a way to scrape it. So yeah, good question there. And then let me show you guys the code here. So this is Google Colab. It's one of the greatest deals on the web. It used to be an even better deal, but they've made it less attractive, but still good. Okay, so let me. Whoa, what's happening here? Okay, that's the problem with FinViz. It will. I'm not going to play videos for you when you least expect it. Okay, so let me walk through this with you guys. But I don't know if this is too small for you guys. Maybe I'll make it a little bit bigger. It might be too small for some of you guys to see. Okay, good. This is probably a little bit easier for you guys to see. Okay, so what we're going to start off with is, so if you guys aren't familiar with Colab, it's just go colab.research.google.com, and basically it's how to run Python. But rather than running Python through a script, it will run it one by one, right? In what they call cells. So what we first do is we install the technical analysis library, install the Alpaca Trading API, as well as Google Cloud Secret. I use Cloud Secret Manager because I'm really paranoid, especially around financials. You generally don't want to have your credentials in code. It's just very dangerous. And then we're going to use Panda data frames. These are just some helper libraries like the datetime math library, the JSON library. We import the Alpaca Trading API as well as the technical analysis. We use NumPy, which is helps you do a lot of kind of matrix calculations. And then here's the libraries for the machine learning. So we're going to use random forest today. And then this is how you authenticate. So you authenticate through Google so that it's hooked up to your Google Cloud. And then what I do is I store my secrets in Google Secret Manager, which is all encrypted. So you put in your, where the secret manager ID is and project ID. And then once you authenticate, it actually gives you the, let me see if I can get rid of this. It keeps popping up. Okay. It will, let me see if I can shut this down completely. Let's see a way to do it. But okay. Anyways, let's see. Yeah, so you get the the Alpaca API key, and then you get the Alpaca secret key, and then this is how you activate it, right? You activate, and we're just doing the paper API here, and then oh, just to be clear, because I probably wasn't clear, this is the code that's running that I just kicked off. But I wanted to kick it off because I ran it earlier today and it takes a long time to run. So I didn't want to do it in here. Otherwise, you guys weren't about to see the results until much later. So yeah, so get all that. And then this is how you activate the Google natural language processing, right? So so you put in the scope for the NLP. This is how you activate that, the service account. Actually, I might be running out of time here, so I'm not going to go over each and every line, but this is the function for the, you plug in the text string, and then this gives you a sentiment, whether it's a positive or negative sentiment. And then okay, we're doing Agilent here, and then we're going to scrape FinViz that I showed you earlier, and so that scrapes FinViz. So we're using Beautiful Soup, so it goes in there and scrapes through the and again, if you're doing really complicated things, you have to start using things like Selenium, for instance, to kind of go through the website. But in this case, we're just going through one page, so you could just use Beautiful Soup for that. So this will scrape all that information, and then so that's what this part here is doing, just scraping the news, and then we basically put this through this all gets put into a data frame, and then we put this data frame into the sentiment analyzer, right, to figure out what the scores are. And then so here what you could see is like for Agilent, where some were positive or neutral, like negative, positive, and this becomes a feature. These scores become a feature into our model. Okay, so so we're using FinViz as one of the data sources into our model. And then here what we're doing is yeah, so here's another view. You can see all the headline, and then you can see the score and the date time. So this becomes a feature into our model. And then what you can see here is okay, so these are just some helper functions, but like the bar set is a helper function to get the data from Alpaca. So that's what it's doing here. So it's basically calling Alpaca using the bar set API to get that, and then it does all the retries to make sure that we have the data frame doesn't have any data holes. Okay, and then with the NLP indicator, what you'll see here for Agilent is it's basically getting all the data from 2.1 to 3.1, and then basically what it's doing is creating features for the time of day, so that we have this. Let's see. Why is the also to determine this in like house? Oh, the way this scoring is done is, let me go back up. So the way scoring is done is, what happens is Google NLP has a natural language processor who actually understands the sentence and understands whether it's positive a sentence or a negative sentence, and it comes up with a score automatically. That's how it does it. So it's using the magic of NLP. And then yeah, so here we're generating all the features for the training data, and then I'm using the TA library, the technical analysis library, to generate all these types of technical indicators, which you guys are probably familiar with, like MACD, ADX, Bollinger Bands, CMF, RSI, et cetera, all these kind of really common ones, as well as the one we did from our NLP. So we put that data frame together, and this is what it looks like, right? You can kind of see, I didn't show all of it, but you could see kind of how this looks. And then we do the same thing for the test data, but for a different time period, right? So from 131 through 315, and then put that all together. And then here we use random forest, using the random forest model. So what we're doing here is we are training it with the data that we put together above, and then we make predictions from it. And we actually do this in a way that's called a rolling. So basically we're training the data, then we're sliding it forward, and then we're having a fixed forecast distance. So basically a forecast distance of 15 minutes. And so it's like sliding forward, and there's a 15 minute in the future forecast that it's doing. So that's what this block of code is doing right here. So yeah, so you could see that's what all this is running right now on. And then yeah, and then the output, right? So so this is what the output looks like. Is basically it's a little bit hard to see here. Let me try to show you this. So you can see what the, oh man, it's okay. I gotta shrink it down. It's too funky with zoomed in. Okay, let's make it a little bit more simple. So here you can see the prediction, right? And this is the ground truth was right here, 125. So so that's how that works. And then if you look at graphically how this looks, you could see the predicted versus the close. You can see it gets pretty close. Now, the straight lines is basically when the market's close, so don't worry about that. Just look at when it's kind of jiggly. That's what's important. So when it's jiggly, you can see that it's pretty close to the actual price. And then in terms of what feature was really important, RSI was really important. So relative strength indicator was important. You can see that sentiment was kind of important, but not as strong as some of the other ones. But you can see it did help. And then there's some that didn't help at all. I realize it's a little bit small, so you guys may not be able to see that very well. And then in terms of what is the error rate, so you can see the error rate here is 2.31. And then percent error is really low, like 0.25%. So really, really good error rate. So let's look at what happens if we didn't use the NLP indicator. So if we didn't use the NLP indicator, we could kind of look at this again. So just remember the numbers here. Like 0.257. So we'll look at the rate without it, and what you'll see, it's something called p-value. So the p-value is really small. So basically it shows that the NLP actually, there's a statistical difference improvement by using the NLP from FinViz, the news, and that's kind of obvious, right? You would figure that the news should significant news being reported on the newswire should be meaningful in terms of predicting the stock price. Okay, so yeah, so now I just explained how the forecast model works, right? So let me explain to you how the trigger works. So this is, so I showed you before on the Colab is like the machine learning model, right? It's basically using random forest model to predict the stock price. Now, the other part of the trading here is the trigger, right? So there's the forecast and then there's a trigger. And what the trigger is doing is it's looking at, so this is the actual Python code that I at the beginning, I kicked off a job on the Pico Group website. This is the actual code that's running. So basically, if the close price, the current close price is lower than the predicted, right? Then you probably want to buy, right? But of course, according to some sort of threshold. And in our case, we use like 0.3, right? So along as it's lower than the predicted amount, you know, then it's probably worth it. You don't want to set it to be just like a pain lower because there's transaction costs. Maybe not in terms of trading commission, as in Alpaca, but there's cost in terms of bid and ask spreads. So you don't want, the threshold cannot be zero because you have to account for the bid ask spread. Every time you trade, you lose a little bit of money. Okay, now if the close price is higher than the predicted amount, so this predicted is what's outputted by the model, what I showed in the collab, right? Then you probably want to sell. But then again, you want to have that above some sort of threshold, right? Because otherwise you sell it for a penny more, but the bid ask spread kills you. You start losing money. Otherwise, if it's kind of within the threshold, then you don't do anything. You just keep the same amount of stock you have, right? So let me check to see if this thing has finished simulating, and it has. So let me show you guys what it looks like now. Okay. Okay, so you guys just saw the forecast model, and the job has finished running. So this was using Agilent, using the random forest rolling, simple trigger. And oh man, it's hard to move the scroll bar. Okay, anyways, I don't know how do I, okay, here, let me just move it like this. Yeah, so so let's look at how the algorithm performed. So let me make this bigger. Okay, so you could see that we started with $10,000, and then we finished with a few days later. We finished with how much? About $10,031. So it was about $35 profit. So I'm just ask, will you have a recording link of this to rewatch? Oh yeah, good question, Evan. We will. I think Alicia, you guys are putting this on YouTube or something like that, right?
Yes, so you'll be able to see it on our YouTube, and then you'll also be emailed a recording of this as well. So it'll be in both areas, plus on our website as well. But if for like easy access to see it, YouTube.
Yep. Okay. So okay, so it was just a few days, right? Made $35. And so the company annual growth rate of 29%, so pretty good, and a Sharpe ratio of 4, right, which is great, right? So so very successful strategy here. Now this is just an example, but this is why people use machine learning. Okay, so let me go back to the slides. So the demo that I just did basically showed off the capabilities of machine learning. Basically in the course we're going to go into a lot more detail about what are the basics of machine learning, what is deep learning, how do we build a stock forecasting model. The demo showed just using a lot of common indicators as features for the model, using also of course the FinViz NLP sentiment into the model as well. We used a simple random forest model as a model. In the course, we're going to get into much more complicated models, but we just use random forest here. And then we forecasted in the future, and we just did a back testing trading where we made about 29% company annual growth rate, which is pretty damn good. And then let's see, questions. So I just kind of went through the formal part. And just want to see if anyone else has any questions about what we just talked about today. Oh, I think there's just a question here. Let me try to make this bigger. It's okay. So RSI was the highest factor in the model. Yes. In that case, it was the highest factor. But it really depends on which model you're using. For random forest, it was. But good question. And then
And then
well,
Greg, before that, Roderick asked, so obviously one can tweak this, which I'm assuming is a yes.
yes, of course. Yeah, sorry, Roderick, I missed your question. Yeah, so so basically, we give you the tools and we give you code to start from, but the point of this, and this was a really simple example. You're not gonna just do what I just showed you. You're probably gonna do a lot more, and you got to tune it for your particular security, whatever the security might be, whether it's a cryptocurrency, Bitcoin, Litecoin, or whatever, or whether it's like an option or whether it's a stock. So these models, there's no such thing as a magic bullet, one thing that works well for everything. You pretty much got to customize this or tune things for whatever security you have to be doing. Right? You can't just fire and forget. So there's a lot of back testing that's involved. There's a lot of tuning of the model that has to happen. And so typically what you do is you'll back test, make sure it works well, then you do paper trading, make sure it continues to do well, then you do live trading. That's kind of the sequence of how you do things. And then I think Demi asking about why BS4 instead of Selenium. You can use Selenium. So there's I'm not saying you can't. In an example I did, you didn't have to, just because the definitive thing was very simple. This is just trying to do a quick demo in the time we had, but no, you could definitely use Selenium. And then it's the best to take algorithm training and machine learning. I kind of think so, because I think what you'll do is you first learn how to do algorithm training, also teach you some basic Python programming, and then the machine learning kind of feeds into that, because you need not just to know how to tell the alpaca or interactive brokers what to do, but you also need to know why or when to do that, and that's where you need forecasting. Forecasting is really important to do that. And then let's see, how much data is needed to train the model? So the unfortunate answer is more the better, right? So if you're trying to train a very simple model, you don't need much training data. But if you start using some fancier neural network type models, or models that are much larger, you need a lot more training data. So typically what happens is for non-time series type of models, you usually have access to more data, and those can be more complicated. But the time series forecasting models tend to have, because you can't generate more labels for time. You can generate more time. So the time series tend to be simpler, more shallow learning models as a result. And then let's see, where was that other question? I might be losing questions here. Oh, can we learn how to use it then by pre-made bots? Yeah, so in the course we give you kind of like the basic frameworks, but the point of the course is you guys have the skills to learn how to modify to make it on your own. Because the bots I showed you here, or the ones you get in the course, are not, this isn't kind of like a fire and forget. We just use it and then it's ready to roll. You have to use different data sources. Maybe you have to use a Reddit feed, right? Wall Street Bets. Maybe you have to use Yahoo Finance. Maybe you have to use some other chat board, right? So you have to customize it for whatever you're trying to trade. Could you repeat the sequence of learning? I'm not sure what that means. I mean, are you talking about when you deploy? I think you may be talking about when you deploy. So basically, you start off with back testing, right? Once you've proven that it's solid back testing, then you move to paper trade, then you move to algorithmic trading. So that's the basic sequence that you want to use. Maybe the sequence, maybe Roderick was talking about sequence of, I think it's sequence of learning for the human. Okay, I think sequence of learning maybe, yeah. So I think doing the algorithm trading and then doing the machine learning trading is kind of what you want to do. What platforms can we use besides interactive brokers? So on Pico Group, you could use Alpaca and interactive brokers, but the skills you can learn in this course you can use for any platform. It's just we're using Alpaca because it's very popular, because it's free and zero commission, and its API is really rock solid, so it's really nice. Do we pay for the data? Okay, so with Alpaca, this is one of the greatest deals, although they're getting to be a little bit chintzy about it. If you just put 1 penny into the account, you get access to all the free data, which is nice. So this is one of the best deals you guys could do is set up for Alpaca account, put in 1 penny, and then you get access to all the Polygon data, which is really, really nice. So that's a huge bonus. So definitely one of the greatest deals out there. So go for it while it's still free. Once we learn this, what are the distinct advantages that well-funded hedge funds have? Very good question. They have a lot of advantages. So they have access to a lot of proprietary data, right? So they have, I'm not sure if you guys ever watch this show called Billions, right? So there's this guy there who like has like all of these like insider information type stuff, right? He has like everyone on the payroll, right? So people are feeding him inside information all the time. So hedge funds have that, right? They'll also like buy like satellite imagery, right? Looking at parking lots of shopping malls to see how busy that they are, right? Or they'll look at the Suez Canal and look at like, oh, this big ship got stuck, right? How does that have impact on different stocks? So they have that. That's a huge advantage. It's just the proprietary data. But here's the thing about it though, is that a lot of information now is on the internet, and so you guys can be subject matter experts. And then an advantage that individuals have against hedge funds have billions of dollars they have to deploy and try to make money on. And you guys as individuals probably don't have $1 billion that you have to deploy and make money on. So there's a lot of small plays, right? Small plays in terms of like deploying $100,000 type of thing, where it's not interesting for the hedge fund because it's like not worth their time to even set that up, because you look at how much some of these portfolio managers make at these hedge funds. They can't, chasing after these small things doesn't make sense. But for you guys, make $100,000 in a couple of days or a couple of weeks, it's probably not bad, right? But for a big hedge fund, not worth it. Not worth the time for them to chase the small. It's like picking pennies off the ground, just not interesting. So that's the advantage of the way to think about it. These hedge funds are like big battleships, right? They go after the big things. You guys are like little, speedboats, right? And so, oh yeah, Axelrod. That's the name, Axelrod. So yeah, so Axelrod has like he's an example of a guy with a ton of proprietary information, right? Maybe illegal proprietary information, right? You guys don't have access to that. Maybe you do, but you guys shouldn't trade on it because you guys don't want to go to jail. But you can use the public information on the internet and scrape it and use machine learning models, because the advantage that machine learning has over humans are really good in terms of you guys have a lot of lived knowledge, but machine learning is really nice because you could get it could handle large sets of data. You could see you can see patterns that humans can't see because it can handle a gazillion. Like you couldn't read 1,000 newspaper articles. It's really, really hard, right? But machine learning can do that, right? You can handle large volumes of data. And when there's large volumes of data, it's hard for humans to operate, right? It's just humans can remember 7 things. But the thing that is really cool about what we're doing here is that you could get these edges. Maybe not make billions, but you can make hundreds of thousands, right, over a short period of time that are not interesting to the hedge funds. Hedge funds, I think some of them are looking at quantum computers. I don't think that's quite there yet. Fiber optic cable is definitely there. A lot of what hedge funds do is they front run the market. So they have they see that someone's trading something and then they go to the exchange directly and trade it in advance. But that takes humongous amount of capital to have that latency advantage. And then let's see. I'm losing track of which questions I answered already.
Yeah, Greg, the next one is going to be from Roderick. Once we learn this, will we have enough skills to work or intern at a hedge fund?
Yeah, so you should have enough skills to do this. Now, entering a hedge fund is a very different story because a lot of them do it on pedigree and there's a bunch of other complicated things that happen. But you should have enough knowledge to do this stuff yourself. Entering a hedge fund, you might be able to, but a lot of them, they look at what school you went to, a bunch of other stuff. The great thing about algorithmic trading or machine learning in general is that the market doesn't care what school you went to. What they care about is, were you right? Was your prediction correct or not? Yeah. So basically, Roderick, I think it's a good point, is that we could tweak a model with the same data, but because the models are able to mine more predictive signal out of the signals that already exist, you're able to get an advantage. You're able to get a more accurate model. So Evan asked, I'd like to ask the $1 million question. So in essence, how many models of these training models can you run or cost? Wait, I don't understand the question. I figure out. So in essence, how many models or these training models can you run? I guess the question is how many training strategies can you run in parallel? And the answer is you could run a lot of them in parallel, right? And this is part of it, right? So the days of making just a ton of money on a simple technical analysis indicator are over, right? So it's hard to outpace the bots because the bots are really fast. The algorithmic trading bots are really fast, and so I mean the large profits, but the pennies are there, right? So if you trade fast, if you trade often enough, like some people do 100 trades a day, you can still make money even though each trade may not be that much money, but you're doing a lot of trades every day. Yeah, I think that's kind of what he's talking about. So I think we answered that question. Do I need a programming background to do all this algo ML trading? So you do need to know some programming. That's what the algo class is teaching you, is to do some programming. Machine learning, surprisingly enough, there's actually less programming than traditional computer programming because you're just training the model. But you do need to know, you do need to know how to manipulate the data. So some programming is needed for that. Yeah, I think Roderick has some good comments about that. And then Norbert asked, where do we deploy a well-tested model to maximize speed of execution? So the answer to that is in the cloud. So I know people who try to deploy the stuff on their own laptop in their house, and sometimes it works, but sometimes like the internet goes out. Sometimes you lose power, and then you have latency issues, right? So this is kind of like why we have Pico Group, is because we take strategies and then we put them in the cloud so that they're maintained. The latency is really low because it's in the cloud, so it's closer to everything else. So yeah, definitely you want to deploy in the cloud, and if you have trouble deploying the cloud, then you can look at Pico Group to help you deploy a well-tested model. There's also a place to test the model, because sometimes setting up your own back testing environment can be a lot of work. But good question, Norbert. Oh yeah, tell us more about your Pico Group. Okay, so I could oh, actually first Roderick was asking a question. Yes, so quantum computing is still very early days, but I think when quantum computers actually become more mainstream or become more practical, I think right now the qubits, I think they're up to like 31 or something qubits, but it's not quite to the point where it could crack like Bitcoin, right? I think once that happens, all your Bitcoin is like worthless because you can have these quantum computers cracking it. Norbert asked a little bit more about what is Pico Group. So here I can show you what this is. So this is our website, Pico Group, pico.group. And yeah, Shor's algorithm is a good point, Roderick. So this is Pico Group. So our point here is to automate day trading. So basically we work with professional day traders and people who are tired of like you're trying to do 10 trades, 10 trades manually a day is a lot, but try doing 100 or 1,000 a day, literally impossible. So what we do is we automate it. And then, so we develop it. We do basically a turnkey service where we will write all the code you need to develop your training strategy. You just tell us in plain English what you want to do, and then we'll maintain it. So it's completely customized. We host in the cloud. We have a little interface that I showed you earlier, that how you can access it over the web or using your phone. We have a big library of models that you have access to. We have all the backtesting environment, which is what I just showed you earlier. And then more importantly, we have the safeguards, which is really important. So yeah, so that's how it works. And then we just, our consulting is just purely hourly, and then the cloud cost is just whatever you use plus some sort of margin on top. So that's what we provide. Yeah, so this is us. So you're welcome to go to pico.group. But any other questions that the attendees have?
Yeah, Greg, there's actually some that Q
Oh,
and
sorry, I have to scroll down more. Sorry, okay.
No
Wait,
problem.
oh, no, actually, I think I answered all of them.
Some of them. Deli also asked, these are new. Do you recommend to buy hardware or software to trade? I mean, desktop or laptop? And then
Oh,
he's
where
also
do you see the questions?
in the Q&A section, there's separate from the
Oh, the
chat.
Q&A,
There's a
sorry. Oh,
Q&A.
sorry, I've been missing all those questions. So let me see. I gotta see the Q&A questions. Where's my window? Oh, here it is. Okay. Q&A. Sorry, guys. I missed all of them. Okay, guys. Sorry about that. Thank you, Alicia.
Mhm.
Okay. Okay. So Dell asked, can we buy pre-made codes? Well, you as part of this course, you actually get pre-made codes, right? Some pre-made routines. So that's part of the course. You guys get that. And then same thing with Pico services that so you start with you're starting with some building blocks versus writing anything from scratch. And then I'm not sure if it's he or she, but Dell also asked, how often are you, so let me answer that. Done. Okay. Do you recommend to buy hardware or software to trade? Well, I recommend for most part that you try to use the cloud to do most of your trading, just because latency is a big deal. Like, okay, so one thing you notice, like in the example we did, we do very short-term trading, and the reason why is because long-term trading is really reserved for humans, like a Warren Buffett, right, or like Axelrod, right? But we do much. Axelrod is not a good example. It's more like Buffett, right? Where he's buying for 10 years in advance, where he sees some really long-term idea about what the price of Coke would be in the future, right? Oh, Dale's asking. That's what I'll just buy a laptop and do most of the trading in the cloud, and use the cloud to do the training of the models and also deployment. And then let's see. Dale also asked, what is data mining? So what data mining is kind of like scraping, right? So it's scraping all this data. Google Cloud also has a lot of different data sources, but the data mining is the fuel for the machine learning models. Any testimonials? Yes, there's a ton of testimonials. So you could go to the Picos website. You could also go to the Lumiwealth website. There's a lot of testimonials on there. So definitely go there. But probably the biggest testimonial is if you got to look at, if you guys haven't heard of this, there's a Renaissance. Renaissance. So Renaissance. So Renaissance Technology, if you guys haven't heard of these guys, a lot of them call them Rentech, but basically it's basically created is one of the most successful firms out there. So James Simmons, if you guys haven't heard, became a multi-billionaire by doing this. And so they're kind of like the forefront. There's a bunch of other ones out there as well, but some of the most successful hedge funds out there are these. So if you want to know, like, why are people doing machine learning or algorithmic training, just look at companies like this. There's a bunch of them, and these guys are kind of replacing kind of like the old school, Axelrod type of people. In fact, when I was watching Billions, they actually had an episode on that. It's kind of interesting, talking about how the non-algorithmic training guys are kind of dinosaurs. So it's even starting to get mainstream. Will ML algo work with Binance? Yes, it will. In fact, what's interesting is Google Cloud actually has a data feed on Binance. So that's actually a good point, Will. Okay, let's see. Did I get all? I answered.
Yeah, there's one more that we need to answer on the Q&A. And then also I just wanted to add one more thing as far as the testimonials. If you guys are looking for like testimonials as far as like the courses, then you can look on the Lumiwealth website. There's a specific all the way on the bottom of the page, there's a link for testimonials. And then also on our Discord, actually, we do have a alumni channel that you can actually reach out to our alumni, people who've taken the course. You can actually go into Discord and ask them what they thought about their experience. I know some people have done that and they've purchased the course afterwards. So that is also another option if you're looking to wanted to talk to some past students.
Yep, exactly. Okay, and then so we got that. Okay, then Dale asked, is quantitative finance similar to machine learning algorithmic trading? It's similar, right? I think quantitative finance is not so much, it's like it doesn't have to be algorithmic trading or machine learning necessarily. The quantitative finance is less the actual raw type of type of trading and or Buffett type of trading, and it's much more modeling out. It doesn't necessarily have to be algorithmic. It could be done on a spreadsheet, but it's basically using quantitative methods to figure out how to trade. So you think of it like technical analysis on steroids. That's what quantitative finance you kind of think of, but it's more than that. It's basically modeling out, but not necessarily using machine learning or quantitative algorithmic trading. Although a lot of them do use those kind of techniques today. But very good question. Okay, good. Did we get all the questions? I'm hoping I didn't miss anything.
I believe we did.
Okay. Okay, good. We're a little bit past the time, but is there any other questions?
One more. I think there might be one more.
Okay.
From Will.
Okay.
Yes, he just typed
Can you
it in.
measure supply and demand? No, so that's a good question. So I think this is I assume that you mean in context of like stocks. I assume the demand and supply of stocks. I assume. Yeah. Okay. So you could build models for that. Or like in the case what we did, we just did a straight price forecasting. But you could also build models of what the demand and supply is of the stock. You could look at the volume. You could look at the how much of the volume is at a certain bid versus another bid, right? And then do trading on that. So those are definitely signals that you could use or features. So in machine learning parlance, they call these signals features, right? And VIX, I guess I'm not sure what the question is about VIX. But yeah, I mean, it's yeah, volatility. I mean, you could use that, but more specifically, you could use like for a particular stock, you could actually look at, yes. So Roderick, yeah, you could use VIX as a signal for sure, but you could also use so the bid and ask isn't just one bid and one ask. There's actually a spread of bids and a spread of ask, and I think that's what Will was asking about. You can use a spread of them, just did like a histogram of them to know as a signal into the machine learning model to forecast, right? So that's actually good point, Will. Okay. Any other questions, guys? I think we got all of them. Or open interest, yeah, that's right. Open interest is another way. So these are all great ideas of signals that could be used or features that could be used in your model to make it more accurate. Okay. Okay, well, I just wanted to thank everyone. Oh, encryption. We have our encryption. Okay, I'm not sure which encryption you're talking about. It could be encryption on, well, one encryption I really encourage you guys to use is not to have your financial securities like Alpaca or IB credentials in plain text. So I definitely encourage you guys to use encryption like secret managers to do that. The encryption might also be talking about like the Bitcoin type encryption and quantum computing. I think we're a little bit far off on that. So I think your Bitcoin, Litecoin are probably secure for right now, but maybe one day all that encryption will be cracked and then all the Bitcoin will be worthless. But I think we're pretty far from that right now. Okay, so I think we'll close it up now then. But thank you guys for all the questions and all the interaction. I love it. It's the people that attend and ask great questions like this that make it very interesting to present. So thank you guys for that. Encourage you guys to sign up for the courses. Join our Discord. You could interact with the people that have taken the course before and get their testimonials on this. And hope to see some of you guys in the class that's coming up. Alicia, do you have any last words?
No, thank you everybody for joining us on this presentation. And Greg, thank you for the presentation itself.
Sure.
And yeah, I mean, if you guys have any questions or anything, you could also book a call with me or my associate Joe. So yeah, but reach out to us, sign up. Yeah, we'd love to have you on board. Check out our YouTube and all the things that we talked about here. So thank you, everybody.
Okay, and thank you, Alicia, for putting this together.
Yep, no problem.
Okay, guys, have a great evening.
Okay, bye-bye.
Bye-bye.
Mhm.